Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, it's time for Canada to get its economic growth going, but that's a tall order. And food in Canada is safe and accessible. Are we making the most of it? Plus, getting big projects done and the challenges that poses. That's all ahead. First, for the week that was in business, it's time for the briefs. For only the third time in Canadian history, the monarch read the speech from the throne, but the vision is the government's and sets out the agenda for the coming parliament, including moving faster on big projects, streamlining the cost of government, and a commitment for military spending. Canadian businesses are feeling the pain of tariffs. KPMG surveyed 250 of them and found that while most agree investing in productivity-enhancing tools is a good idea, 59% say they can't afford to do it, given the uncertain economic outlook. More consumers are missing credit card payments, according to Equifax. Its latest report on Canadian credit showed that 1.4 million people missed at least one payment in the first 3 months of the year. It also noted that consumer delinquency rates rose 8.9% for non-mortgage holders compared to a year ago, and average debt hit $21,859.
It definitely is younger consumers, maybe even lower income consumers as well, where we are seeing those missed payments really rising.
Many Canadians are now eligible for a payout after a settlement in the bread price-fixing scandal. The $500 million settlement includes about $100 million already paid out by Loblaws in the form of gift cards. Now, Loblaws and its parent, George Weston, will pay another $400 million to anyone who bought bread between 2001 and 2021. The expected payout is up to $25 per person. A BC-based software firm just closed new financing that values the business at $1.8 billion. Jane Software helps healthcare practitioners manage their businesses. The new investment is from Silicon Valley-based TCMI, along with two other U.S. firms. And those are your business briefs. The latest review of the Canadian economy from the OECD includes some familiar themes, including tackling weak productivity and fixing housing affordability. But, of course, a changing relationship with the U.S. is the overlay on top of it all. Alvaro Pereira is Chief Economist and G20 Finance Deputy of the OECD. Thank you for being with us.
Thank you. Pleasure being here.
And I did want to start there because, of course, it's what makes economists' lives so difficult these days. But that level of uncertainty is sort of overhanging the whole outlook. How do you factor it into what will happen in Canada in the year ahead?
Well, listen, I think for everybody that is doing forecasting these days, it's becoming very challenging, even more than so when with the uncertainty with COVID. Because very often the assumptions change quite, not on a daily basis, but it changes regularly. So it becomes very, very difficult. So what we did, we often use different scenarios with different assumptions, and then we try to understand what is the most likely scenario going forward and what is the most, more accurate assumption. So that's what I did for this forecast of the Canadian economy.
And so with that uncertainty, productivity is, of course, probably the central challenge for our economy. It's one that you've identified. It's one that a lot of countries try to tackle. So I'm interested in your thoughts of the best way to achieve it. Are there pieces of advice that you would say from a policy point of view, or even just ideas that we would like to have in our minds that would help us improve our productivity?
Well, before we talked about that, I think just to go back to your previous question on trade, by far, this is the most important factor because obviously Canada exports 70% of its products or exports goes to the United States. Mm-hmm. And so trade certainty, getting an agreement with the United States to decrease trade barriers almost close to zero for decades, with exception of a few products and a few sectors. So going back to that situation, or a situation in which we have a trade deal that allows the two economies to be even more integrated, we think this is by far the most important factor to affect productivity, but also growth in the short and long term. The second issue, we look at the facts behind why is productivity so sluggish in Canada. I should say that obviously for many OECD countries in the last 20 years, there's been a decline in productivity growth. Canada is no exception, but Canada, even inside the G7, is one of the countries where it's the middle of the pack, but almost on the second lower part of the pack. And so it's important to understand why is this so. In part has to do with the composition of the Canadian economy and in particular the importance of the extractive industry in the Canadian economy and the commodity markets for the Canadian economy. Mm-hmm. And so when you have the extractive industry not doing so great in terms of productivity, this affects aggregate productivity. But there's more to it, because we know that contrary to what happens in many other countries, where frontier firms are growing in terms of productivity about 3.5%.
Right.
Canadian frontier firms' productivity declined in the last 2 decades to about 1%. So this is a puzzling fact. It's partly, again, to do with the composition, but it's something we think needs to be addressed by policy. And finally, if I can, another factor I think affects productivity is not enough R&D. Canada only invests about 1.8% in terms of business R&D of GDP, whereas the OECD average is at least 3%. So Canada needs to invest a lot more in R&D and reduce skills mismatches. So Canadians are have the best educated system in the OECD. So in terms of tertiary education, by far the best in the OECD. But we have huge skill mismatches in Canada.
Yes.
And which means that we are not using the skills to the right places, and these mismatches are plaguing productivity too.
So good to have you for this. Appreciate your time today.
Thank you very much. Appreciate it. Thank you.
Alvaro Pereira is Chief Economist and G20 Finance Deputy of the OECD. Coming up, Canadian food is something we can all take pride in, but not something to take for granted. That's next. Welcome back. Canadians are more focused than usual on homegrown food. Here's what you need to know. If you want to buy Canadian food, look for Product of Canada, a label that means all or nearly all of the ingredients are domestic, and the product is also processed or made here. Made in Canada, meanwhile, is a bit looser. It can use imported ingredients, but suggests the transformation or processing of the food was done in Canada. Taken all together, Canada's food system employs more than 2 million people, or 1 in 9 jobs in this country. While the obvious jobs are agricultural, the path to our table includes researchers, fertilizer firms, transportation networks, processors and packaging companies, and, of course, retailers. A healthy food sector is one that maintains affordability, safety, variety, and is produced in a sustainable and resilient way. And while it's domestically important, Canada's food sector is also an exporting one, just shy of $100 billion worth back in 2023, making us the 8th in the world for food exports. The U.S. is our top destination. 60% of our exports go there, but China is growing in importance. Exports to that market were up 112% between 2012 and 2023, at just shy of $15 billion. While our food system is large and important, do we invest enough in making it world-class and ensuring we're exporting all that we can? Lisa Bishop-Spencer is Executive Director of the Canadian Centre for Food Integrity. Lisa, thanks for being with us.
No, thanks for having me.
I think Canadians really are more focused on sort of the source of their food lately. How do we turn that into a plus? How do we kind of turn the focus in this sector in a way that will actually keep us world-class?
I think that's a really important question. So we're creating what's called Canada's food system, Our Food, Our Future. And that's a sector-led initiative nationally to build public trust in one of Canada's most strategic assets, really, our food system. It brings together partners from across the value chain to kind of share that unified, honest story about how the food system works, why it matters, and who's behind it.
And so do you think Canadians need more information than they have? In other words, are we learning in a way that we probably should about where food comes from, what it means to be made here, and what it means to be imported?
More and more, absolutely. But what we're seeing, though, is a bit of a softening in trust in the food system. As of the end of last year, only 45% of Canadians had a positive impression of the food system, and that was down 7 points from the year before. So, but at the same time, though, 48% say they trust agriculture overall. So that's strong, and it's a foundation that we can build on, but only if we act now.
What do you explain that trust erosion to? What's going on?
It could have been a reflection of the times. That survey was conducted in the late summer of last year when trust in a lot of things had declined. But when we have seen a bit of a shift in that trust, moving in the right direction. And I think that's a direct result of some of the things that are happening south of the border that are really encouraging a sense of Canadian pride that you talked about earlier.
I was looking at the shift just in the makeup of our crops, and canola is down, wheat is up. I assume that's because canola producers have been dealing with tariffs in China, that one of their biggest markets. And so it just makes sense not to grow something that's under trade pressure. Are we thinking enough in Canada about being self-sufficient, or are we thinking about being good exporters? And can we do both?
I think we can do both. Canada's food system is built on constant innovation, right? From things like climate resilient crops to smarter logistics, sustainability gains, and plant science innovations alone last year, or in 2023, added $3.5 billion to the GDP before the first seed was even planted. So that kind of strategic thinking is really important. We really do need to ensure that people understand that the system works very hard, and there are a lot of players in the system that work really hard to bring our food to our plate.
One other aspect of this that Canadians probably might not know but should be proud of is how productive our agro-sector is, sectors. What more can be done to support those sectors? That can often be smaller business, medium-sized businesses. Is there enough policy support from governments for helping the investments we need to keep them growing, but growing efficiently?
I think that comes also from sort of portraying and conveying to the Canadian population that the Canadian food system is a part of that national identity, right? 86% of Canadians say that it's important that food system communicates in an honest, open, and transparent way. So if the government can help us tell that narrative, bring partners together from across the country, and it can really help us in terms of telling that national story of the importance of the sector. And I think so often we kind of equate the sector with the little red barn and the little green tractor when so much is being done, and we really are a strategic asset for the country.
So good to have you, Lisa. Really appreciate your time.
Thank you.
Lisa Bishop-Spencer, Executive Director of the Canadian Centre for Food Integrity. We can't talk about affordability in Canada without dwelling on the cost of food and the aspects of our system that might make it pricier. Sylvain Charlebois is Director of the Agri-Food Analytics Lab at Dalhousie University. He's Director of the Masters in Agribusiness program at Texas A&M. Sylvain, great to have you with us.
Nice to see you, Emina.
So we do know, obviously, that it's a highly productive sector. It's a big exporting sector, hugely important, and a safe one. We're all proud of our food system. But on a week when we get a settlement on the bread fixing scandal, I have to ask you, are we actually paying more for food in Canada than we might?
Well, we don't know the answer to that question, to be honest. I think everyone has the right to think twice about pricing at the grocery store. We've seen some cases in the U.S. actually with meat processing, with canned tuna, canned salmon as well. But in Canada, we've had this bread situation. It's been dragging on for 10 years. The investigation started in 2015. And now a lot of people are wondering if there's collusion elsewhere in the grocery store. And so I think a lot of people were surprised by the bread story back in 2017 when the CEO of Loblaw, Galen Weston, actually admitted guilt in this scheme that lasted 14 years. So there's the element of trust really has been heavily impacted by the story.
And that's at the retail level. We saw some of that also during COVID, right? Concerns about price gouging. You and I have talked a lot about that, and whether or not there's even room in the very narrow profit margins of those large grocers to accuse them of anything. But we do have a system where a handful of players dominate, which of course often makes us worry, not just in food, Sylvain, it comes up in other sectors as well, but it makes us worry that it's open to abuse. Is there some other way we could go about it to create more competition?
Absolutely. There's always room for more competition. Just to go back to your point about profiteering, of course, there was little evidence of that, and margins have remained consistent for the last 6 to 10 years. But you can't break the law, which is exactly what happened. And so when you look at the bread situation, there are allegedly 7 companies involved. 3 of them have actually admitted guilt now. 4 are still under investigation. When we were approached by the Bureau back in 2018, we were asked if a bread price fixing scheme was possible in Canada, involving 7 companies. And we did say it is plausible, but it is actually impossible due to Loblaw's influence and power. It is impossible to run such a scheme without Loblaw, which probably explains why Loblaw has been very forthcoming about this situation.
So interesting. In the end, because this was made public, because now there is a settlement, to your point, it might increase mistrust. But does it actually help make sure it doesn't happen again? Does this kind of shedding light on this mean that that kind of behavior will be less likely to emerge somewhere else?
I think it boils down to the Competition Bureau. It has more power now than just a few years ago. It can go in and get data, and that needs to happen to reassure the public and make sure that companies are made accountable towards the Canadian public. Because right now, there's the distrust that we feel is probably due to weak policy.
Sylvain, always good to have you with us. Appreciate your time.
Take care.
Sylvain Charlebois is director of the Agri-Food Analytics Lab at Dalhousie University. He's also director of the Masters in Agribusiness at Texas A&M. Coming up, there are ambitious plans for big projects and reducing internal trade barriers in Canada. We're talking to our Trade and Intergovernmental Affairs Minister coming up. But first, a BC-based billionaire has agreed to purchase 28 stores from Hudsons Bay across 3 provinces. Wei Hong Lu says they will be transformed into modern department stores. They won't be called the Bay, since that name was sold to Canadian Tire along with other intellectual property rights, but whatever they're called, here's hoping they can get up and running in time to offer jobs to the 8,000-plus Bay employees about to hit the streets. We're back after this. Welcome back. Recently on the Wonk podcast, I spoke with Canada's Minister of International Trade, Dominic Leblanc, and asked him about the recent comments the new U.S. ambassador to Canada has made to CTV about how tariffs in this country would be the lowest and a possible deal could be done by July. Here's what Minister Leblanc had to say.
We don't want to land at something less than 10%, Amanda. We want to get to 0. That's, as I say, we were firm and have been publicly and privately in terms of that objective, and we think that that's in the interest of the American economy and American consumers as well. But we still have to continue to make that argument. And the timeline again, sure, July is better than August. June would be better than July. So our hope is to make significant progress as quickly as possible, but recognizing that it's a moving target, and the Americans say to us that they want to arrive at a big deal quickly.
Minister Leblanc is also in charge of the One Canada file, which will play a key role in getting big projects going. Here's what he had to say about that.
Mr. Carney was clear in the election campaign that developing, for example, energy corridors across the country, which can very well include pipeline infrastructure, conventional energy, understanding that the social license and the acceptability in different provinces is obviously part of the conversation. So it's sort of not a red light, green light thing as much as figuring out a way with a new economic reality driven by the United States and the desire to develop, as the Prime Minister said, trading relationships with reliable international partners. And just look across the Atlantic. There are a lot of them in Europe, for example. So how do we have the right infrastructure to ensure that those trading relationships can be enhanced, strengthened, amplified, expanded? I'm optimistic that the country is in a different mindset than perhaps it was 5 years ago. And you see that from business and political leaders right across the country that previously one might have thought would have been very resistant to expanding pipeline infrastructure are now saying, look, we need to look carefully at a way that can be done properly.
When Donald Trump passed his tax bill recently, it included punishing changes in how Canadians' investments in the U.S. might be taxed. Here's what Dominic Leblanc had to say about those.
We worry about some of these tax measures that the administration has spoken about. We're obviously following this particular piece of legislation as it makes its way through the U.S. legislative process. We don't want to prejudge what the Senate might do with it. We note that it passed Congress by a very, very small margin. As we speak, some senators are in Ottawa to sort of, on a goodwill mission, some senior senators to sort of say, you know what, we all don't have the same view on the economic relationship between Canada and the United States and the administration has. So we'll continue to advocate against these measures. And it has to be part of our conversation, and is part of our conversation with the administration, with President Trump's administration, with Secretary Lutnick and others, because sure, there are tariff measures, as we said at the beginning of the conversation, and then there are a series of other measures. In this case, worrisome tax measures that will affect Canada and other allies of the United States. Again, it's not in the economic interest of the United States to do this. To your point, I remember meeting executives from the CPP investment board. They talked to me about the kind of investments they made. They can be, frankly, transformational for a lot of big industries in the United States. So all of this stuff, we think in the end, will prove to be counterproductive to the American economic interest.
Dominic Leblanc is Canada's Minister of International Trade and Intergovernmental Affairs. You can catch that whole conversation on the Wonk podcast, anywhere you get your podcasts. Time for the takeaway and selling your plan for the future. The throne speech that opened the 45th Parliament was notable for a lot of things, not least the monarch reading it. But beyond the pageantry or distraction, depending on your perspective, the speech laid out an agenda for the government that is all business. The new Major Federal Project Office will streamline big projects with a promise to partner with the provinces and avoid duplicating efforts. And the government is pledging to rein in spending on itself. The growth rate of its own operating budget will be reduced to 2%. A rate below inflation, implying real trimming. And the Prime Minister promises to do it without cutting transfers to other governments or to people. The heart of the fiscal promise is getting its operating budget to balance within 3 years. That's not a promise to balance the entire budget, because this government will change how it accounts for some spending, with longer-term projects being debt financed and current operations financed with current revenue. It's an important mindset shift, which, if not abused, could be a positive one. That's the good news. The trouble with the throne speech is what we don't know. And what we don't know is where our trading relationship with the U.S. will land and how long it will take to get there. As we saw this week quite clearly, businesses are unwilling to invest in themselves in the face of so much uncertainty. And creating an environment where business does the heavy lifting of economic growth is one of the most important tasks of any government. It also happens to be one of the hardest, especially at a time when major factors like our most important trade relationship are up in the air. My takeaway? Feel-good moments are all very well, but at the end of the day, it's business the government needs to convince about its intentions. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.